Hey guys, Mike here. So we got another jam-packed video for you. So we're going to go into the charts and earnings and stuff we got going up next week. There's a lot of high flyers, I like to call them, stocks that are reporting earnings. So we could see some huge moves in those stocks. So if you're a gambler, there you go. There's this week coming up is going to be your week. So, but then we're going to also go over a pattern that is taking place in a lot of different charts. If you've never heard of it before, if you're in the crypto world, you've definitely heard of it because we saw it a lot. And then we're going to go end it with an interview that I like from this gentleman. Manages about $4 billion. He's writing a book about bubbles. But he just goes into, one, how to spot a bubble. And two, he says something I kind of like because I've been saying it for a long time that a lot of people just don't, marry together in a way. And so we're going to go into that. But I will start off with this. And this is people that bought those houses when rates ran up and everything else. And you just see right here, man. Home buyers' mortgage payments are 26% year over year more than if you obviously bought down in 2020, 2021. And you can see right there on average about 2486, I think it says, at a 6.5% rate. And rates are going up right now, as you can see. But, I mean, you just look at where they were. I mean, I'm just sitting there thinking, I'm sure you or a lot of you are part of the same group I'm part of where you refinance around 2%, 3%. And I mean, wow, that's rough. And that's what I was saying about, because of that, that's where rents in a lot of areas are the same as what houses are. And of course, when your housing market's in the dumps, it does have this reflection on the economy. People will look at the housing market and say, oh, well, it looks terrible, so the economy must be terrible as well. But of course, like I'm saying, since people aren't buying houses, that 20%, and you're going into buying a house, it's sitting in those accounts, right? And they're using it to fund other things, okay? And so we'll see, because I mean, right now you would think rates are probably going to get back up to where they were on mortgages, so it's not going to get any better, even though home prices in a lot of areas are actually coming down. Let me know in the comments of how the prices in your area are coming down. But another sign that investors are going risk off right now is what is happening to high yield bond, right? You had one of the biggest cash inflows for the short-term treasury ETFs, and then we go down the bottom, and you had one of the largest outflows since 2020, I believe. And so, people are looking for safety. And I mean, why wouldn't you go into a treasury versus a high yield bond, especially now? And speaking of risk off, you can see right here, this is called the Wyckoff distribution pattern. And you can see this in a lot of charts, man. When you pull them up, this is Amazon on its weekly chart, and you can see it almost matches it perfectly, right? And if you don't know what it is a basically range-bound trading period that happens after a prolonged uptrend. But most importantly is what's happening during this time frame. And what it is the big players, this is when they build up their short positions, distribute the long positions, and then wash retail traders out. And they do this very subtly, okay? That's why it happens for a long period of time. And then, of course, once they're set up, you see this huge move down. And you saw this in the crypto sector. This is where I think Wyckoff became pretty famous. Because it happened in quite a few of those digital currencies. But when you pull up a lot of charts now, you'll see this on their longer term time frames, what's been happening. And so I'm telling you this because obviously this won't be the last time this ever happens. It got famous for a reason. But when you see those sideways trading patterns, I'm actually working on another video for the members about this, about these patterns that go sideways and what history shows and stuff, because it really is a powerful move. And something you can really recognize and say, uh-oh, this ain't good. Are we about to get washed out? Because it don't always go down, by the way. It can go up. And that leads me into the S&P chart for this week, right? What are we watching out for, okay? Again, we're sitting down there right near the 200, right near this downtrending line, which will lead back into that channel we were in for over a year. Leads us back down into the anchor VWAPs I told you about just the other day. Leads us right down to that golden pocket area. So really a lot of support there coming into it. All right. Now I did add this right here. This is the dark pool. About $2 billion of orders last Friday, I believe it was. And so you're looking around 460. Sometimes these act as a magnet, right? Will it get pulled up and then reject it right there? We'll have to see, because again, you can see that kind of corresponds into the trend line we just actually broke down through as well. And so, a lot of stuff to happen. And the weekly options expected range is between 385 and 407-ish. So, top of that's around that double top support resistance line. 385 will put us probably right below that trend line right there and put us back into, or at least break through that trend line, to put us back down that channel stuff we hadn't been in a little while. And guys, if you get anything out of this, please hit that like button. It really does help the channel. And if you're new here and you like this kind of content, think about hitting the subscribe button. I really appreciate it. And with the Qs, the options market is expecting around 286 to 310 with Tesla, who's a big mover, of course. It's been like 176, 216. So where it closed at, about a $20 move in either direction. What to see. I mean, obviously, we'll know first of the week which direction we're actually heading there. So, something to pay attention to. But the earnings this week, I mean, these are some of those volatile earnings we'll probably get to see in some of the biggest moves. And if you look here, you're going to end up with Fubo TV, Lee Auto in the morning on Monday. And then from there, you'll go with Oxy. That's Warren Buffett's favorite stock, it seems like. Zoom usually gets a pretty decent move on it. It's a Cathie Wood stock. Then we go Hims and Hers. That's actually done a big movement since January, but it's very volatile. Norwegian Cruise Line, Target, AutoZone. These I don't expect like crazy moves. These aren't tech stocks. But, then Advanced Auto Parts and everything, but the big money owns these. Rivian, you can see a big move. AMC, obviously retail favorite. First Solar, can see a big move. That's a volatile one. Blink and Virgin Galactic, I haven't heard about in for a long time. Monster Energy is another big one. Neo, Wendy's, Lowe's, Dollar Tree, Neo. Most likely you get a big move either way. I don't know about the rest of those, but we just want to know about the retail side of things and how things are looking and everything. That's still thing we're spending. I think that's what's going on. Salesforce could have a big move. Snowflake, Plug, Splunk, Okta, Celsius. That's going to be extremely volatile aftermarket right there. You can bet money on that. Then again, we're going to retail, Best Buy, Macy's, Kroger. Then you're going to end up with Costco. C3AI could have a big move. That's for sure. ChargePoint could have a big move. Marvel could have a big move. And then that's pretty much it. I mean, Nordstrom, obviously retail and stuff for the C. I think they did good last time. We'll have to see. Dell might have a decent move. And that's about it on earnings. And then looking at the economic data, I mean, you got a pretty loaded week this week, right? You're going to have a lot of good stuff talking about the economy, right? Core durable goods month over month. Pending home sales, I pretty much want to bet they're probably down. Another FOMC speaker, most likely trying to drive the markets down. Then on Tuesday, we're going to end up with Chicago PMI, which, I mean, obviously we're coming in hot so far, so why not make that one come in hot? Richmond Manufacturing Index, could it get any worse? I mean, I think it can only go up from here. Another FOMC member, by the way, speaking. Final Manufacturer PMI and ISM Manufacturer PMI. Construction spending, ISM manufacturing prices. Then we're going to Thursday with unemployment claims. That'll be a big one. Another speaker coming out. And then Friday, let's wrap it up with final services PMI, ISM services PMI, and then another FOMC service member bringing out there to try to bring this market down. You almost guarantee it. Now, that leads me, for those who hung on, to the interview I was talking about. And this gentleman, they managed him and his firm about $4 billion, but he's been in this racket since the 70s, right? And so now he's handling assets, but he was a broker for many, many, many years and stuff. And so he knows Paul Tudor Jones and all these guys and everything. And so the first thing he says is something I keep telling people. A lot of people, they're either just into the fundamentals or they're just into the macro part of it.
Most people that are fundamentally research-oriented, that look at things like earnings and big picture trends in the economy, they don't typically look at technical analysis, but we do both, and I think it's a big advantage.
And there's a reason why he said that, and again, it comes to a video I'm working on for the members and stuff, talking about this stuff, and I agree with him. Let me know in the comments if you disagree, but yeah, I believe you absolutely can tie both hand in hand and not hurt, right? And to me, it gives you a much more full picture of what's going on, right? And then the next thing is this guy's writing a book on bubbles, right? And he's trying to say, how can you recognize them before they pop and stuff?
So they're hard to describe verbally, but you can recognize them. They leave a very specific signature, and that specific signature is basically straight up price moves. When you see something, whether it's a sector or an asset class or an individual security that just goes straight up, that's a bubble. Now, the hard part is knowing how high is high, when is it going to pop? When does it get to the point where it's just ludicrous and there's going to be massive downside? And invariably, they go inflate much bigger than a rational person would expect. I mean, bubbles by definition are irrational. So I think the way you deal with it, and you can make a lot of money in the late stages of a bubble, as you know. So one of the ways to play that is to do the opposite of what most people do with bubbles, which is to invest more and more as the prices go higher and higher. It just happens all the time. It happened with the tech bubble. It certainly happened with cryptos. A rational person would do the opposite and say the further up it goes, the more I'm going to sell. So you basically dollar cost average on the sell side into these even mini bubbles, much less a maxi bubble, because you really never know, to your point, whether a mini bubble is going to become a maxi bubble. But I don't think there's any way that anybody could debate that we saw in 2021, with the meme stocks, and then later in the year with the cryptos, it was just mass insanity. And I think we did really hit peak insanity sometime in the first half of 2021. And ironically, that's when I started writing Bubble 3.0.
Hey, my big question to you guys is, which bubble out there do you think is the biggest bubble of all, just waiting to pop? All right. I think I've been on record saying, to me, it's the China real estate market. I think that thing has been pumped up so much that, when it finally is allowed to pop, if it is ever allowed to pop, all bubbles do eventually. And to me, that's the biggest one. So put in the comments which one you think it is. I almost guarantee you, I know a lot of people are going to pick. And so, I just want to at least bring that to you, because we're going to see a lot more bubbles. We all know it, right? It's just the way the market is right now. What's another bubble you seeing? Probably AI. That would be another one. That'd be, to me, another good one that you're just seeing really getting started. And so we'll see how high that one can go, right? And so anyway, hope you guys got something out of it. Hit the like, subscribe if you did, and I'll end up seeing you guys tomorrow.